Good afternoon and welcome to your weekly personal finance segment. This week we continue to take a closer look at the ETF market. Now when it comes to finances and investing, knowledge as well as solid advice are always helpful. So joining me this afternoon is Michael Keating of InnerHarbor Advisors as well as Chris Hempstead, who's from WallachBeth Capital. Good afternoon, gentlemen. Thanks for joining me again.
Good afternoon. Thanks for having us. Thanks for having me.
Well, Mike, I do want to start out with you. Now, ETFs are fairly transparent when it comes to financial instruments, but if individual investors or institutional investors want to replicate what they're seeing in an index, what would you say to them?
Well, most of my clients at InnerHarbor are individuals, so I would say to them, you could absolutely replicate an ETF, but for example, the S&P 500, do you really want to go out there and buy 500 different companies, and do you want to incur all those transaction costs, or do you want to just buy one holding, buy one ETF holding and get that done? Sure, you can see with the internet, with transparency, what is involved in what's in that basket, but it's often a lot more cost effective and a lot better use of your time to go out there and just purchase the basket as a whole instead of trying to fill it on your own. One thing that I did find in my conversations with Chris Hempstead is that a place like an institution that might have the manpower, that might have the staff to be able to go out there and replicate an ETF by doing the research on what's in the index, it's sometimes in their best interest to do that, but not always. Sometimes it makes more sense to go out and purchase the ETF, and Chris knows a lot more about that.
Well, Chris, what do you have to say to that if an individual investor or even an institutional investor wanted to replicate what they're seeing in a certain index?
Right. I mean, if they had the capability to do it, we would encourage it. I mean, but it is a mountain of work. Some of the indices have 20 names, 25 names. Some of the indices have 2,500 names. So when you're talking about replicating an index yourself, you've got to go out there, buy all of the stocks in a particular index and the proper weightings. In addition to that, when you're trying to maintain that portfolio or that index, you have to keep track of all the corporate actions, the dividends, the splits, anything that might change. And that's a full-time job for a lot of people. When you look at the cost efficiency of ETFs, when you're talking about funds that have, management fees in the teens or even some single-digit basis points, why would you want to go through all that trouble to have a full-time staff person to sit there and watch an index all day, every day? I mean, the wrappers are pretty cheap in the form of an ETF, and we think they make a compelling argument for owning those in lieu of the basket. Additionally, some of the more successful ETFs, you look at SPY, which is far and away the most successful and biggest ETF out there in terms of assets and volume. The spread in the SPY in nearly every trading session is about 1 penny wide. The spread of the index itself that you would look to replicate in ETF terms is probably closer to a nickel wide. So the ETF is a more efficient vehicle than actually replicating the index itself.
Chris, I think you bring up a lot of important points when it comes to cost efficiency as well as personal research that might be involved. But I know that you had one quote where you said that ETFs trade with frequency and also create naturally efficient liquidity. Could you explore that concept a little bit more?
Right. So when I speak of naturally efficient liquidity, SPY is a perfect example. Or EEM or IWM. They're names that are very widely held. They're very well known in the investment community. They've been around for a long time, and they trade very actively in the market at minimal fractional spreads of 1 penny. It's very easy for people to get in and out and trade with other participants in the market. An ETF, maybe a new ETF has come to market and they don't have a whole lot of natural liquidity, a lot of holders of the ETF in the investment community. So when someone goes out to buy or sell that ETF, more times than not, they're going to be trading with a market maker or a principal, liquidity provider. When that is the case, you're usually going to be buying at some sort of a premium or selling at some sort of a discount. The object there is to minimize the amount of premium and discount that you're trading at so that you can get the most efficient entry and exit into that. So names that are trading like water, SPY, EEM, IWM, are naturally efficient. Newer ETFs that are trading by appointment are ETFs that you really want to slow it down a little bit and try to find that price that best defines the index that you're trying to replicate.
And last but not least, before we wrap it up, Mike and we've talked about the very basics of ETFs in the past, but for beginners out there who might be interested in getting their feet wet with ETFs, what's your advice?
For beginners, there's so much information available on the internet. It's free. Each issuer of ETFs, whether it's PowerShares or BlackRock or State Street or Guggenheim, and then there's more ETFs. There's First Trust and there's Global X and Emerging Global and Index IQ. There's so many of them. I can't list them all, but they've all They all have their own websites. Every ETF has, and the holdings are disclosed on the website, every bit of information you need. In addition to that, there's research websites out there. There's people who just love to write about ETFs and tell stories about ETFs. So there's a lifetime worth of data available on the internet if you wanted to look for it. But I would start with the actual issuers' web pages themselves and go from there.
Well, Chris and Mike, thank you so much for shedding more light on the ETF market, and thank you so much for joining me.